Welcome back, everybody, for another deep dive. Today, we're going to be looking at Equinor, and we're going to be using their 2023 annual report to do so.
Sounds good.
So Equinor is an energy company,
Yeah.
but they're interesting because they're really trying to ride two waves at once.
Yeah.
They've obviously got their traditional oil and gas business, but they're also really trying to make headway in the renewable energy transition as well.
Absolutely. And what's interesting here is that they're not just some small player.
Right.
They've got a global footprint.
Yeah.
And their business is actually divided into segments.
Okay.
They kind of tell a different part of the story.
So let's start unpacking those segments then.
Yeah.
So their core is still exploration and production.
Yeah.
But it's not as simple as, just drilling for oil, right?
Right. They break this down into three key areas.
Okay.
Exploration and production, Norway,
Uh-huh.
international,
Okay.
and USA.
Okay. So let's start on their home turf,
Sure.
Norway. What's the story there?
So this is where they've been operating for decades, really tapping into the Norwegian continental shelf.
Mm-hmm.
But even with all that experience, they're facing pressure
Oh, really?
to reduce their environmental impact.
So it's not just about finding oil and gas anymore. It's about doing it responsibly and sustainably.
Right.
Does the report give any insight into how they're handling that?
It definitely highlights the importance of operating within Norway's really strict regulatory framework,
Okay.
which includes stringent environmental regulations and a big focus on safety.
Gotcha.
They're also investing in technology to reduce emissions from their operations.
Okay, so they're trying to clean up their act on their home turf.
Yeah.
What about their international operations?
So Exploration and Production International spans a diverse range of countries,
Okay.
from Brazil to the UK to Angola.
Wow.
Each region has its own unique set of challenges, from political instability to varying regulatory environments.
It sounds like a logistical nightmare trying to navigate all those different landscapes.
It is.
How are they managing to operate effectively across so many borders?
Well, the report emphasizes the importance of building strong relationships with local communities and governments,
Okay.
really adapting to local conditions and ensuring compliance with international standards.
Mm-hmm.
They also highlight their commitment to technology and innovation as key drivers of their success in these diverse markets.
Technology and innovation, that seems to be a recurring theme. It makes sense, though. You need to be at the forefront of those areas to succeed in such a dynamic industry. Now, what about their U.S. operations?
Sure.
They've got a pretty significant presence there, don't they?
Absolutely. Exploration and Production USA is a major player, particularly in the Gulf of Mexico.
Okay.
But they're facing headwinds there too,
Oh, really?
particularly with the increasing focus on renewable energy and the push to reduce reliance on fossil fuels.
It sounds like they're caught between a rock and a hard place.
Hmm.
They need to maintain their current oil and gas production to meet global energy demands. But they also need to transition to cleaner energy sources to stay relevant in the long run. What's their strategy for navigating this tricky situation?
It seems to be a two-pronged approach.
Okay.
First, they're trying to maximize the efficiency and profitability of their existing oil and gas operations.
So squeezing every last drop of value out of their traditional business
Huh.
makes sense from a financial standpoint. What's the second prong of their strategy?
Investing in renewable energy projects,
Okay.
particularly offshore wind farms.
Okay.
They're leveraging their expertise in offshore operations to gain a foothold in this rapidly growing sector.
So it's like they're trying to build a bridge to the future,
Yeah.
using their existing strengths to support their transition to a new energy landscape.
Exactly. But there are challenges there too.
Oh, yeah.
The renewable energy market is becoming increasingly competitive, and they're facing pressure to scale up their investments quickly to stay ahead of the curve.
It sounds like a race against time. They need to squeeze every ounce of value out of their traditional business while simultaneously pouring resources into building a whole new energy future. Okay, so we've covered their exploration and production segments. But what about the rest of their operations?
Right.
What happens after they extract the oil and gas?
That's where their marketing, midstream, and processing segment comes in.
Okay.
This is all about getting those resources to market.
Right.
Think refining, transporting, and trading.
Hmm.
It's a complex global network.
With oil and gas prices being so volatile lately, I imagine this segment has been on a roller coaster ride. How are they navigating those market swings?
Well, their report emphasizes flexibility and agility. They're focusing on optimizing their trading activities, securing long-term contracts, and diversifying their customer base to mitigate the impact of price fluctuations.
Okay.
They're also investing in infrastructure upgrades and efficiency improvements to remain competitive in a rapidly changing market.
So they're trying to stay one step ahead of the market, adapting to the ever-changing dynamics of the global energy trade. It sounds like a high-stakes game of chess, with each move requiring careful consideration and strategic foresight. But hold on, we can't forget about the elephant in the room. All this talk of oil and gas while the world is clamoring for clean energy, where do their renewable energy ambitions fit into all of this?
That's where their renewable segment comes into focus.
Okay.
It's not just about diversifying their energy mix,
Yeah.
it's about establishing themselves as a leader in the transition to a low-carbon future.
Okay, let's dive into that. We've touched on their wind farm projects, but what else is in their renewables playbook?
They're looking beyond wind power,
Okay,
exploring other renewable energy sources like solar and hydrogen.
interesting.
They're also investing in carbon capture and storage technologies,
Yeah.
which could play a significant role in reducing emissions from their existing oil and gas operations.
So they're not putting all their renewable energy eggs in one basket. They're hedging their bets and exploring a range of options to position themselves for a future where fossil fuels may play a diminished role.
Mm.
But let's be real, these renewable energy projects require massive investments. Are they putting their money where their mouth is?
That's a crucial question,
Yeah.
and one we'll delve into deeper as we analyze their financials.
Okay.
But from what we've seen so far, they're allocating significant resources to their renewable energy ambitions.
So it seems like they're taking this energy transition seriously. But let's not forget, they're still heavily reliant on oil and gas for their revenue and profits. It's a delicate balancing act trying to satisfy both their shareholders and the growing demands for a cleaner energy future.
Absolutely. And that's what makes this deep dive so fascinating.
Yeah.
We're seeing a company grappling with the complexities of a changing world, trying to navigate a path that balances economic realities with environmental responsibilities.
It's a story that's still unfolding, with each chapter revealing new challenges and opportunities.
Absolutely.
Let's move on to their financial performance next and see how those numbers reflect this ongoing transition.
Sounds good. So let's dive into the financials and see what the numbers tell us.
All right, let's get down to brass tacks and talk financials. We've seen how they're structured now. Let's see if those ambitious plans are reflected in the numbers.
The first thing that jumps out from their income statement is the sheer scale of their operations. We're talking total revenue of USD 106.848 billion.
That's a massive number. But revenue alone doesn't tell the whole story, right? What about their profitability? Did they manage to turn that revenue into actual profit?
Yeah, they did. Their net income came in at USD 37.884 billion,
Okay.
which indicates a healthy profit margin.
But it's important to note that this represents a decrease compared to the previous year.
So even energy giants aren't immune to market forces. What were the key drivers behind this decrease in profit? Was it purely due to the volatile energy market we discussed earlier? It's not quite that simple. While the fluctuating oil and gas prices certainly played a role, there were other factors at play as well.
Okay.
Increased operating expenses, driven in part by inflation and supply chain disruptions, also put downward pressure on their profits.
So it was a combination of external market pressures and internal cost challenges that led to this dip in profitability. It highlights the delicate balancing act they're facing, trying to manage costs while adapting to a rapidly changing energy landscape. But let's not dwell on the negatives. They still managed to rake in a hefty profit. What were some of the key contributors to their revenue generation?
Their core business exploration and production continues to be their bread and butter, accounting for the lion's share of their revenue.
Okay.
But we're also starting to see their renewable energy investments contribute to the top line.
Yeah.
Although it's still a relatively small portion of their overall revenue.
So the seeds of their future growth are being sown, but they're still heavily reliant on their legacy business for the bulk of their revenue. That makes sense given the long lead times involved in developing renewable energy projects. It's not like flipping a switch and suddenly becoming a green energy powerhouse. But let's shift gears and look beyond just revenue and profit. What does their balance sheet tell us about their overall financial health?
Their balance sheet reveals a company with a solid foundation. They have total assets of USD 142.265 billion,
Okay.
with a substantial portion tied to their exploration and production infrastructure, property, plant, and equipment.
So those are the big ticket items, the offshore platforms, the drilling rigs, all the physical assets that underpin their core business. But remember, they're also investing heavily in renewables. Are those investments showing up on their balance sheet yet?
Yeah, you'll see their investments in renewable energy projects reflected in their assets as well, though as we discussed, it's still a relatively small portion of their overall asset base.
Right.
What's also notable is their commitment to managing debt responsibly. Their total liabilities stand at USD 53.547 billion, giving them a healthy debt-to-equity ratio.
Okay, so they're not over-leveraged, which is a good sign.
Right.
It suggests they're not putting their financial stability at risk to fund their growth ambitions. But let's dive a bit deeper into their cash flow, the lifeblood of any business. Are they generating enough cash to cover their operations investments and those juicy shareholder payouts we discussed earlier?
Their cash flow statement paints a positive picture. They boast strong cash flow from operations,
Okay.
indicating they're generating ample cash from their core business activities. This allows them to fund their day-to-day operations, invest in new projects, and still have cash left over to return to shareholders.
Strong cash flow is always music to investors' ears.
Yeah.
It means they're not just profitable on paper, they're actually generating real cash to fuel their growth and reward their shareholders. But remember those organic capital expenditures we touched on earlier, those investments in their future growth, especially in renewables. How are those impacting their cash flow?
Those organic capital expenditures, projected to be around USD 10.2 billion for 2024, are a significant use of cash. But the key takeaway here is that they're funding these investments largely through their own internally generated cash flow, rather than relying heavily on external financing.
So they're not burning through cash reserves or racking up debt to fund their growth. That suggests a level of financial prudence and discipline, which should be reassuring to investors. But let's be honest, investors don't just care about cash flow. They want to see that cash coming back into their pockets. How is Equinor delivering on that front?
They're committed to returning value to shareholders through both dividends and share buybacks. The report specifically mentions their intention to increase the ordinary dividend by USD 0.03 per share for the fourth quarter of 2023.
A dividend increase always a good sign. It shows they're sharing their success with their investors. But what about those share buybacks? Are they planning to continue repurchasing their own shares?
Yes, their report indicates they plan to continue their share buyback program, which can be a way to further enhance shareholder value by reducing the number of outstanding shares and boosting earnings per share.
Okay, so they're ticking all the boxes here.
Yeah.
Solid profits, a healthy balance sheet, strong cash flow, and a commitment to returning value to shareholders. It seems like they're firing on all cylinders. But remember, we're not just looking at the past. We're trying to understand their future trajectory. What does this financial performance tell us about their ability to navigate the energy transition and thrive in a rapidly changing world?
So we've seen that they're financially sound, but does that mean they're set for the future?
Right.
The energy landscape is shifting rapidly, and they're juggling this tricky balance between oil and gas and renewables.
That's the million-dollar question, isn't it?
Yeah.
Can they maintain their profitability while making the investments they need to transition to a low-carbon future?
Let's start with their plans to keep those shareholders happy.
Yeah.
We've touched on dividends and buybacks.
Right.
But what's the bigger picture for creating shareholder value?
Well, their strategy hinges on a few key elements.
First, they're laser-focused on growing cash flow and returns.
So it's not just about handing out cash, it's about generating sustainable growth that can support those payouts over the long term. But growth in what? Are they banking on oil and gas forever, or are they putting their money where their mouth is when it comes to renewables?
Their report makes it clear that they see renewables as a crucial part of their future.
Okay.
Those organic capital expenditures projected at USD 10.2 billion for 2024 tell us a lot about where they're putting their money.
That's a significant chunk of change. But how does that translate into concrete actions? What are they actually doing to make this transition a reality?
They're investing heavily in offshore wind farms,
Okay.
leveraging their existing expertise in offshore operations to gain a foothold in this rapidly growing sector.
It's like they're taking their deep-sea drilling knowledge and applying it to wind turbines. But is wind power enough? What about other renewable energy sources?
They're not limiting themselves to just wine.
Okay.
They're exploring solar hydrogen and even carbon capture and storage technologies.
So they're diversifying their renewable energy portfolio, hedging their bets, and positioning themselves for a future where the energy mix might look very different from today. But let's be honest, this transition isn't going to be easy. What are some of the biggest challenges they face in making this shift?
One major hurdle is the sheer scale of their existing oil and gas operations.
Right.
It's not easy to just, turn a massive tanker like that in a new direction.
It's like trying to do a U-turn in the middle of the ocean. What else is making this transition tricky?
The renewable energy market is becoming increasingly competitive.
Okay.
They're facing pressure from both established players and nimble startups, all vying for a slice of the pie.
It's a whole new ballgame with new rules and new players.
Uh,
But amidst all these challenges, are there any silver linings? What are some of the potential benefits of this energy transition for Equinor?
By embracing this transition, they're really positioning themselves as a leader in the energy future.
Hmm.
This could give them a competitive advantage as the world moves towards cleaner energy sources.
So it's not just about doing the right thing for the planet, it's also a savvy business move. Any other potential upsides we should highlight?
They're also diversifying their revenue streams,
Oh, yeah.
making them less reliant on the volatile oil and gas market. This could lead to more stable and predictable earnings in the long run.
Diversification, stability, leadership in a growing market, those are some compelling benefits. But at the end of the day, actions speak louder than words. What concrete steps are they taking to ensure this transition is a success?
Well, they've set ambitious targets for reducing their carbon emissions
Okay.
and are actively implementing initiatives to achieve those goals. They're also investing in research and development to drive innovation in renewable energy technologies.
So they're not just talking the talk, they're walking the walk. It's not just about setting targets, it's about having a clear roadmap for achieving them.
Yeah.
But let's zoom out for a moment and look at the big picture. What's the overall takeaway from this deep dive into Equinor?
I think we're witnessing a company in transformation. Navigating a complex and rapidly evolving energy landscape, they're facing challenges, but they're also seizing opportunities.
It's a story of adaptation, innovation, and the pursuit of a sustainable future. They're balancing the demands of their traditional business with the need to invest in a low-carbon future. It's a tightrope walk, and only time will tell how it all plays out.
One thing is certain.
Yeah,
Their journey is one that's worth watching closely.
absolutely.
The decisions they make and the actions they take will have implications far beyond their own bottom line.
Right.
They have the potential to shape the future of the entire energy industry.
It's a story that's still being written, with each chapter revealing new insights and new challenges. So listeners, stay tuned as we continue to explore the ever-changing world of energy and the companies that are driving its evolution. And don't forget to check out Equinor's full annual report for a deeper dive into their story.
It's a fascinating read for anyone interested in understanding the complexities of the energy transition and the role these giant companies play in shaping our future.
All right, folks, that wraps up our deep dive into Equinor. We've explored their business segments, dissected their financials, and examined their strategies for navigating the energy transition. It's been a journey of discovery, revealing a company that's both deeply rooted in the past and boldly reaching for the future. Thanks for joining us, and until next time, keep exploring, keep learning, and keep diving deep.